Hey guys, welcome everyone. Thank you for joining us again on Binomo Live on our live streams on the channel. Today is a Friday. It's a pretty good day so far, pretty good week so far. I hope you guys are having the same as well. Today we're going to be talking about trading tools and choosing the right tools for your strategy, for the purpose and your trading style, because there's lots of tools out there on the platform, lots of tools out there that you can find on the internet, but not making sense of all these tools is going to really stop you from making profits. So you got to understand the tools that are available to you, and you got to be able to practice and get used to them and find the right tools for the right assets for the right situations. So I'm going to talk about some of the examples, some examples tools that I have been using and how they are useful in certain situations. Not all tools are useful for all situations, so it really is dependent on the asset, dependent on the situation or the scenario that you are in. Obviously, if you're trading a lot of fundamental news, economic data, then the tools that you need also include not only technical indicators but also fundamental analysis tools that you either find on the platform or elsewhere. So let me know what are some of your favorite tools, whether they are technical or fundamental. Hi, C Power Change, I see you online. Thank you for joining us. We are going to talk about tools for about 10-15 minutes, and then I'm going to go to the markets and discuss some important developments that has happened this week. It may set the tone for next week, so that's going to be useful for us as well. Nasim, you haven't made any profits from this yet. Okay, be patient, brother. You can make profits if you apply yourself consistently, bring yourself 100% to trading and learning every single day, every single week. Okay. Now, when I say that you don't have to spend 8 hours per day trading, you can spend 30 minutes, you can spend 1 hour focus trading, focus learning every day. If not, you can do it 2 days or 3 days in a week. Okay, you don't have to even be in the market every day. Now if you do that consistently, that's where the secret is, that's where the improvement is going to come. But the most important word that you need to be aware of is focus. Okay, you need to focus really on the learning and on the trading. So now let's go back to tools and touch on tools for a while. So for our foundation, when we're trading assets on the market, our foundation is obviously charts. Okay, now with charts, it's technical analysis, and with technical analysis, there's lots of tools. If you go to the platform, there's so many tools out there. If you hit this compass button, you're going to see all the different tools that we have. Okay, there's so many of them. You got to make sense to some of them and then practice using them. Now, some of these tools are really simple to use, and it doesn't mean that they're useless. Okay, I used to trade using RSI, using moving average, using MACD, even using Bollinger Bands, and I lost a lot of money in the past. I've lost a lot of money, tons of money, using all these different tools. But over time, it's not the tools that count. Okay, over time, it's you that counts. It's how you analyze, it's how you process the information. Now I can tell you right now, I'm very consistent with the use of moving average, with the use of RSI, relative strength index, compared to any other tools. I don't have to even switch on 5 different tools at any given time. In a particular week, at most I'll probably be activating only 3 types of tools, and that's enough to be able to make profits. Now the mistakes happen when you are overconfident. Okay, you make some wins with a couple of tools that you're using, then mistakes starts to happen. You start to make more trades than you are supposed to, and then you trade with bigger positions than you are supposed to. That's why mistakes happen and you lose all your gains. And you also start to, you could start the week with some losing trades, and then that gives you fear. And that fear, if you are not aware of what fear really is and how the markets work, you will forever be affected by the fear of making losses. Okay, now you got to understand, the thing about fear is, in trading you are going to win and you are going to lose. There's no perfect formula where once you figure out the formula, you're going to win all the time and you're never going to lose. That's just not true. Okay, So you have to have this right expectation in terms of losing. It's okay to be making 10 trades and then losing 2 or 3 trades. That's normal. Okay. And being able to find to understand your losses, why they happen, what mistakes led you to those losses, is really the key. So when I say apply yourself to your trading, focus on your trading, focus on your learning every day or a couple of days a week. Once every single day, spend 1 hour with real focus. Then you can really see when you're winning, why you are winning. Was it your psychology in terms of when you decided to trade? The prices will move all the time, but when you decided to make that trade, to open your trade, is really what counts, because that when is not dependent on tool, but it is also dependent. A huge part of it is your psychology, your confidence, and your analysis. Okay, if your analysis is incomplete, or if your analysis is not taking into account all the important things, then you will tend to make mistakes. Now, also, the focus is in terms of when you are losing. So when you are losing, spend 30 minutes, spend 20 minutes looking at all those losing trades and figure out, was it your technique, was it your strategy, was it your psychology, was it your entry? So what is it? There will be something that you can focus on. Why? Because it will happen again and again and again. If you have been trading the same way, now the losses and the mistakes will be the same kind of mistakes you're making, and that's how you're gonna be able to detect it and fix it. Okay, find out what those mistakes are and make sure you don't repeat them. Now, when you make winning trades, when you make profitable trades, find out what's working for you. What was the right thing you did that allowed you to open the trade and make money? Find out what those things are that was working correctly for you and repeat that again and again and again. Okay, so in terms of tools, I can tell you, so for today, for example, we had 2 big pieces of news. One of it is euro inflation. Euro inflation was rose more than expected. Okay, inflation was higher, so euro is expected to be strong, the currency. And then US personal spending, PCE inflation, came in less than expected. Well, it met forecast, but it was less than expected. So personal spending was 0.2% compared to the month of April. This is for the month of May. Okay, we are in the month of May. So 0.2%. Okay, 0.2% in April compared to the previous month. Okay, so that is suggesting when PCE inflation is less than expected, it will suggest weaker dollar. So today the story is stronger euro and weaker US dollar. Also stronger Australian dollar and weaker US dollar. Now we see that from the charts. When the news came out, let me go to the charts. Are we in euro? Yeah, we're in euro. Oops, okay. Okay, so we're in euro, and this is when the news happened. So the asset was trading down, as you can see. The asset was trading down, and I've got my 2 indicators here. My 2 indicators here are moving average lines. I've got the fast line, and I've got the slow line. The fast line is the yellow line. The slow line is the green line. So it crossed. Okay, it crossed. Fast line crossing the slow line from a higher position moving down. So that is signaling a downtrend. And then the downtrend did happen on the 15 minutes time frame. It happened up until right here, and then it changed direction. Now when it changed direction, the cross happened, and you need to find out where the resistance is just before the cross. So if the cross happened somewhere here, where was the nearest resistance? So this could be a resistance. This could also be a resistance. Okay, the high point from a red candle. Okay, high point from a red candle. So the nearest resistance is somewhere here, 108,218. So really, I'm not trading based on the cross. I'm trading based on when the resistance is broken. Okay, so the resistance is broken with this green candle right here, but it didn't stay broken. It came back down and then jumped jumped back up, came back down with this red candle. So got two red candles down there. And then you got red, green candle, and then only after 6-7 candles that the candles started to stay above the resistance line. Okay, so I know that this particular technique works on the 30 minutes time frame, works on the 15 minutes time frame, and I can even trade it on the 5 minutes time frame. Okay, now for 1 minute time frame, I don't need to use this because for the 1 minute, I'm just trading the reversal. I'm just trading the pullback or the retracement. So for the 15 minutes, I'm waiting for this resistance to be broken and then for the candles to stay above the resistance. Now it happens somewhere here. Now I can open my trade here, but today is a bit special because we've got the news coming. So that news was released here. Okay, so I could take the risk of not knowing whether the news is going to be good for euro or bad for euro, because the news that was coming out was PCE inflation report, which is right here. If the PCE inflation report was saying inflation was higher than expected, then US dollar will become stronger, will be relatively stronger versus the euro, and then the asset will pull down all the way down really fast. Now it didn't happen, but I didn't know that. So if I traded this setup right here, I can probably make some money here. But there's a lot of candles. That is a lot of candles because each candle, remember we are on the 15 minutes time frame. The moment it stayed up, it broke this resistance and then stayed up. It was this candle and this candle, and then I can open a trade somewhere here using 3 or 4 candles, 5-minute candles. So within 15 minutes, if it was 3 candles, or within 20 minutes, I could have made some profits right here before the news. Before the news came out. Now, why would I trade before the news? Because I've got a setup here saying that there is an upward move, and this upward move was able to break the resistance. Okay, so now when I'm somewhere here, if I'm already profitable here, okay, and I did got some profits from this from my live account. Now, when I made some profits here, now the thinking will be I need to open a second account, second trade. Why? Because it's still continuing to go up, but that is a little bit dangerous. Why? Because the news it was coming closer to the news, so the news was coming here, and if I got it wrong, I would immediately lose that trade, my second trade. So I didn't open my second trade. I wanted to wait until the news came out, and then I can see whether it's going to be strong euro or strong dollar. Now the news came out and it was a strong euro and weak US dollar scenario. Now it pushed all the way up here. Now then markets got exhausted, and as you can see, there's a pullback right now happening right now. Now the pullback hasn't yet created the situation where the moving average would cross, the two moving average lines would cross. So it hasn't happened yet. So this move is really fast. Okay, now is it okay to trade this? I don't know. Let's look at the 5 minutes. We will be able to get across on the lower time frame. There you go. That's the pullback that we saw in the 15 minutes. So it happened here. The cross happened here. And where is the lowest level before this cross? Might be somewhere here. There is a support line right here. So if it's going up, we're looking for resistance line to be broken. If it's going down, we're looking for support line to be broken. So ask yourself, when there is a cross, where is the nearest support line? The support line is right here, 108,677. Now, I will be waiting for the support line to be broken and for candles to stay below the support line. Now, did it happen? It happened here. Look, it broke the support line and it stayed down. The candles stayed down. Now it pushed down here, and then you can see there is a consolidation here. It didn't move anywhere. We got some green candles. So markets are not sure whether to push it further down or not. Well, I can take that as a signal. I can really take that as a signal because it has broken support and stayed below the support. The consolidation is not pushing things up. In fact, it's trying to push things down. Now, if you wanted a second confirmation for this, if you wanted a second confirmation. Now use support and resistance lines as always. So in this zone where the price is flatlining or moving sideways, you're looking at the nearest support. The nearest support is right here, 108.511. Okay, 108.511. Now I want a candle to break the support. I want a candle to break the support. That's probably this candle. And then I want a second candle to stay below the support. If I see that, that's second confirmation that this downtrend still has got momentum to continue. And then I'm going to open my trade right here. So let's wait for that. It looks like it's going to happen. So let's wait for that. Okay. In the meantime, I'm just going to set a 10-minute, 15 minutes trading duration. So 11:15, 11:30. Yep. Okay. Make sure I got my trading position ready. So I'm trading $10 for this trade, and now I'm just waiting for that second candle to happen. Looks like it's going to happen. And then we'll go to AUD USD just before that. Okay. Now, if the second candle. After this candle, this is the second candle. Now, if this candle confirms, I can immediately open the trade, or I can go down to 1 minute and wait for a green candle. Why green candle? Because that's when it retraces. It gives you a temporary pullback. Now, that temporary pullback is going to give you the room you need to make profit on the way down. Okay, so you can use 1 minute to wait for the flip. It will be really short, and then you can open your down trade. And I think we got the second candle confirmation already. Let's have a look. Not yet. It's still running. We have another. Yeah, it's still running. So I'm waiting for that second candle confirmation right here. And then I can go to the 1 minute to wait for the flip. Okay, I'm waiting for the green candle. Okay, there you go. And I can open a trade down. Now the green candle is not gonna stay for very long. You're probably gonna see a flash of it, and then it might even disappear if the downward momentum is really strong. Okay, it looks like it's still going on strong. So if you see a green candle, that's a good opportunity to open the down trade. Yeah, look, this candle, this is the second candle. It doesn't want to go back higher than the support line. So that is a signal for us that the downtrend is still happening. Okay. And so if you're looking at this, okay, I'm just gonna use that. Okay, I got that green candle. So as you can see, I'm not using really complicated setups. I'm not using 5 different indicators. Okay, in terms of time frame, I'm using 2 or 3 different time frames. I'm using the 15-minute time frame. I'm using the 5-minute time frame. I'm using the 1-minute time frame. Use all these tools and see if it is making you profits. Use all these tools after you are familiar with them. Now, how do you become familiar with them? By trading on your practice account, which is your demo account. Don't practice on your live account. Practice on your demo account. By practicing, you will know which tools, what are the limits of each tool, and when is each tool most suitable to use for any particular given situation. Okay. Now, while waiting for the trade to go on, I do want to say that candlesticks are not the only charts you could use. We could also use line charts. Okay, let's go to line charts. And sometimes you look at candles and you're not sure whether things are really going up or things are really going down. No, remember when I said that there is a support line, and we need that support line to be broken. Okay, and then for the price to stay below the support line. You remember that? Okay, so this is the support. If you can't see it with candlesticks, Okay, sometimes you can't see it with candlesticks because there's got too many movements and too many lines. But if you change, so this is a support line, see? This is the support. If you change it to line chart, you can immediately see it. There's the support line. Now, to ask yourself the question, did it break the support line? Yes, look at this line. It went through the support line. It broke the support line. Now, second question, did it stay below the support line? Yes, look at the current price. Look at the support line. The support line is here and the price is here. So, number one, it broke the support line. Second, it stayed below the support line. That's all you need. That's all you need. And then when are you going to open the trade? Go to 1 minute and wait for the flip. Wait for the green candle. So turn back your candlestick on and then wait for the flip. Now guess what? I got the flip just now. That's why I opened the trade. And it's pushing down after that. So we might get this downtrend continuously going down for the next 10 minutes. And hopefully we'll be able to show some profits from the trade. We've got 8 minutes to go, 9 minutes to go. Okay, so we let that run. So remember, tools are not complicated things. You got to find out basic tools to use and practice. Okay, there's no shortcut to success. If anybody tells you they are shortcut to success, you can try practice that shortcut. If it works, it works. If it doesn't work, then go back to hard work. Okay, so hard work is usually better than shortcuts, because shortcuts are not applicable to everyone. If you use shortcuts, if everybody could use shortcuts to win, then you see everybody will be millionaire traders, and that's just not true. Okay. And so I've talked about support and resistance. Those are basic tools that you can use. I've talked about trend lines you could use. No, not just trend lines, but also line charts. Okay, line charts. Use line charts and candlesticks together. And then moving averages. Yeah, I've talked about moving averages. Okay, RSI. RSI is going to give you also a reading in terms of the momentum of the asset, but RSI is more useful when you go higher time frame. Okay, so let's go to higher time frame and look at the RSI if we can. So okay, there you go, and then I'm going to activate RSI. RSI, here we go. Let me know what you have, what tools you're using and what's working for you. Then we can share that with other traders, and we can probably see if it's useful for our situations as well. Okay. So, hi Vignesh, hi. Thanks for coming back to the channel. Great to see you here. So RSI is basically telling us whether things are overbought or oversold. Okay. Now, when we say oversold, really we are talking about momentum, but the momentum is too negative. Oversold means too negative. Too negative means it's going to reverse and come back to normal. Now when we say overbought, we say that the momentum is too positive. Too positive means it's going to come back down and become neutral again. So remember, too negative and too positive. Okay, oversold and overbought. So you just need to be aware of those things. So when you look at charts, then you know where things are and where things are likely to go. As an example, Euro USD, close to oversold right here. Now oversold is when it hits. No, hang on a second. My RSI oversold needs to be 30. I'm going to use 30. Overbought, I'm going to use 70. Okay, that's better. So, see, oversold. It's oversold, and remember what I tell you about oversold. It means that it's too negative. It's going to come back at some point. So it did come back. Okay, it did come back. Now, I don't open a trade with RSI. I'm just using it to read the momentum, to read the sentiment, what other people are feeling in the market. So the feeling is too negative, it's going to reverse. So we wait for the reverse, and then we wait for crosses. Crosses we wait on the 30 minutes or on the 15 minutes chart. Crosses of moving average lines. But before the crosses happen, you will see momentum becoming too negative or too positive. So it was too negative, and then it came back, and then a cross happened, and then you could open a trade before the news came out. So the news came out here, and things got really high. See, the momentum was overbought. too positive. And then when it's too positive, look at what happened after that. All the fun ended and things started to come crashing down. Okay, so use RSI, use simple indicators, see how it affects your assets. You know, you might not like Euro USD. I talk about it all the time. You might not like AUD USD. Use these indicators on assets that you like. Use these indicators on assets or even commodities that you love watching, and then see if it works. See if it gives you good information for you to trade, and then try it, practice on the demo account. And then if you make consistent profits, then go and graduate to your live account. Always remember, even when the strategy is working, you don't make a huge trade. Keep your trade sizes small so that when you lose, you are not psychologically affected. Okay, so there you go. So the momentum was really too positive. When things are overbought above the 70% line, the RSI, things are too positive. It's going to come back to neutral and it starts to come back down. Now, then I go to the 15 minutes time frame and look for crosses of the moving average line. If I can't find it here, I'll probably go to the 5 minutes time frame and then find it there. Now, what's the difference? The cross between the 5 minutes and the 15 minutes time frame. Well, the 15 minutes time frame is a stronger trend. Now that means I can open my trade slightly longer. Now if I'm using crosses from the 5-minute chart, then I cannot open my trade for very long, maybe 2 or 3 candles at most. So 10 minutes or 15 minutes trade duration, that's it. Okay, so that's the difference. If you're analyzing using short time frame charts, then don't open your trades for very long, keep it short. If you're opening your trades using 15-minute or 30 minutes chart when you do your analysis, then you can open a slightly longer trade duration when you open your trades. So I think we are still in profit, yes, and we've got 3 minutes to go before we close that trade, and we got a chance to see that the strategy is working for us today based on the cross and based on the support and resistance that we are reading. So when things are moving down, we are reading support. When things are moving up, we are reading resistance. Okay, and let's see if there's anything else. Yeah, so let me know, what do you think about using simple tools to trade? When we say use the right tools, it doesn't mean you have to use the most advanced and super complicated tools. It doesn't mean you have to use tools that nobody else knows how to use. Your trading advantage as a trader is not from you using the most complicated and most expensive tools. Okay, your trading advantage comes from you using tools that you fully understand, you using tools that have been giving you good results when you are practicing on your demo account, and then after that, when you move to live trades, those tools still work for you. So that's what it means, choosing the right tools. Okay, it's not using a ton of tools, 10 tools at the same time. It doesn't mean using the most expensive tools. It means using tools that you fully understand and it works for you. Okay, so keep that in mind. So let me see, is this trading? Yeah, okay, so this trade is still working and we have 1 minute on the clock before the trade closes, and hopefully we get a book a profit for the final trading day of the week. Like I said earlier, this is a good trading week so far, because a lot of these predictions that we have been making, a lot of this analysis that we have been making by looking at charts have been working for us. I think there were 1 or 2 trades that I opened earlier in the week as well. Yeah, there you go. 22nd of May, there was a profit. 23rd of May, I did not make a profit, and today we might make a profit right here. Okay, so that's really good. That's really cool. And 30 seconds to go. Let's go to 1 minute and see live price movement. See if it's gonna break through this entry point that we made right here when we opened the trade. And Yep. Let me know if you have any questions at all in the chat or in the comments section. If you're joining us after the live stream, be sure to include your comments or feedback so that we can take those into account and probably give you an answer or feedback by the next couple of live streams. So we are able to get a profit with that trade. Yay! Isn't that great? Okay, so really it's not, the point is not that I can make a profit or I can avoid losses in the demo account. The point is really showing you how you can use really simple tools and use tools that you understand to make analysis that gives you a high chance of making profits and avoiding losses. That's the most important thing, and I hope you take away that advice as you head into the weekend, and hopefully you make better trades on your practice accounts next week and then also in your live accounts. Okay, so I hope the video or the live stream has been helpful to you. If you find it useful, give us a like and subscribe, and be sure to share this video and live stream with your friends. Hopefully they can all join us in future live streams. Now I want to say enjoy your trading, but we are already at the end of the week, so probably have a good rest and do lots of reading and do lots of reviewing of your trades during the past week, and hopefully you come back next week fresh with better motivation to trade. I'm gonna see you guys next week. Enjoy yourself. Take care. Bye bye.